Interest rates are going to remain higher for longer. We are not in a bear market for Treasury yields. TLT stock has tapped out. I mentioned that before. Some people think that there's some kind of bull market in TLT stock. I do not see that happening. I expect that we will remain TLT stock, the ETF against United States Treasuries 20 plus years. I expect this to remain sideways for some time. It will take a solid 6 months, probably from right now. We won't know until, say, March, April, May, what could possibly happen next with interest rates. That the Federal Reserve is going to remain pat. Because of that, I continue to step in and sell calls against TLT stock, the ETF on the Treasury yields. I don't see this thing going higher. I expect it to remain sideways, and I'll sell these calls. That worked out last week. It worked out again this week. We'll see what happens next week. We're continually going to get more and more information. Let's jump in and I'll show you the charts and why I just made another quick buck off of TLT stock, showing that it moves lower because higher interest rates are here for some time. If you're just finding me for the first time, make sure to hit that like and follow button. What I do here is I break down the entire economy piece by piece by piece in order to show you what is driving the stock market and why. And in this case, this is the chart on TLT stock with a 1 hour bar chart. I had sold calls on Monday, expecting that we'd see a pretty benign week this week. The move lower today was pretty much less than benign, we'll say that. I have been stepping in anytime we got a big spike, step in, sell those calls. I continue to do so. Interest rate yields are not going to plummet. That is my thesis. And I saw a kind of a snide comment where someone had said something and completely misunderstood what I was saying. TLT stock is not in the process of just rallying. TLT stock will move sideways and likely from this point probably start to trickle a little bit lower and lower and lower. The reason why? Interest rates are going to remain higher for longer. It will be about 6 months until we get more information that will be conclusive enough for the Federal Reserve to step in and either lower interest rates or raise interest rates even further. What I'm looking at with the economy is this. We're seeing a small little dip that although these interest rates are having some effect, the economy is just going to keep pushing forward. We'll see some more robustness pretty soon. 2, 3, 4 months, people are going to be like, wow, the stock market's really going. But we're also going to see inflation numbers. We're also going to see other factors that would force the hand, or at least the verbiage from the Federal Reserve to say, we're leaving interest rates higher for longer. In that scenario, TLT stock drops hard. I see the economy dipping slightly with employment and revenues, then moving right forward, and the Federal Reserve is going to have to step back in. The M2 money supply is not shrinking enough. And that's really a bigger factor than, say, the interest rate outlook. Here is a look at the US 10-year Treasury yield. I can see us hitting the 4.5, 4.55, 4.6 level at some point. This is not going to be a straight move upward. We're probably likely going to see a lot of sideways activity for some period of time. Keep in mind, the United States federal government is running a fairly decent deficit. On the one hand, they just did an auction on the 10s, and it was well received. And that's actually really good news because the Federal Reserve is not gobbling up every ounce of supply. But should the federal government continue with that deficit, individuals with savings have to choose to take their savings and push it and give it to the United States federal government. That means that rationing of supply, other areas lose out. Investment might be one of them. Here is initial claims. We did see a dip today, but if you look at the 4-week moving average, which is a little more sort of true, it evens things out, and we are still kind of pressuring higher with initial claims. The thing is with initial claims, it hasn't really been that high. But the problem is Those who have claimed their initial being laid off are staying there. This is continuing claims. And this is the one I really pay more attention to, more so than other things, unless initial claims all of a sudden has a wow number. This number right here, continuing claims, is really kind of what I'm focusing on. If we see continuing claims continue higher, notwithstanding the latest dip, give us 6-8 weeks more data points. If we continue to move higher and higher, the moves by the Federal Reserve have had some effect. But where do we go from there? Interest rates are moderating to levels that are more normalized. The interest rate environment itself has not been this, where it was, low, kind of ever. Where we are now is a little more normal. The economy isn't going to tank entirely. But I really want you to kind of take a look at this number. Now, I look at the modern economy as being roughly starting in 1990. We entered the dot-com area in the mid-90s, late 90s, and then all sorts of craziness all through the early 2000s, then, of course, COVID. Those events are really what kind of transition our economy to where we are right now. But go all the way back to 1990 at the beginning of this chart, and you see the inflation rate. We were above 7.5% for the core, the yellowish number there. It took 6 years for that thing to drop down to 2.25%. Take a good look at that chart. Take a good look at the numbers. It wasn't until 1997, pushing into 1998, that the core rate moved enough that the Federal Reserve lowered interest rates. 6 years. Let that roll through your mind for a minute. We're far higher. We have a long way to go. And I have said this before many times, that what's going to happen with the inflation numbers, it isn't magically just going to hit 2% and then all of a sudden, oh wow, the Federal Reserve are genius and we can move forward. It's going to be sticky and stick around for a really long time. It took 6 years before. If we cut that down into half, we're not even halfway there yet. Interest rates are going to remain higher for longer. This is normal. The new norm was much lower interest rates previously. We'll see these interest rates remain higher, and because of that, TLT stock, the ETF on interest rate yields, will, of course, or the price of bonds, will, of course, go sideways for a long time. I don't see TLT stock moving higher. I see it moving sort of sideways to lower, that every time it does move higher, I'm going to step in and sell those calls. At the same time, should we see TLT stock fall like it did before, I'll step in and sell those puts. I see this TLT stock moving sideways, and I'm looking at the whole picture. The other thing to keep in mind is it's not just inflation. M2 money supply, keep an eye on that. M2 money supply is far too high on a trendline basis. The Federal Reserve needs to constrain the money supply by choking out the incentive to borrow money in a fractional banking system. Because of that, interest rates will remain higher for longer. M2 money supply will shrink. Bank balance sheets, those numbers that the money that they loan out will shrink. Because of that, inflation eventually will get there, but it's going to be sticky for a minute. TLT stock, that's about as high as we're going to see for some time. If we go lower with TLT stock, I'll sell those puts. I look for this to be the new norm, sideways. Make sure to hit that like and follow button. See you in the next video.